David Morgan with you. It's late February 2013. I'm doing this presentation, Is the Bull Market Over?, referring to basically both metals, but primarily the silver market. And this is at a time when the sentiment is very low in the metals. Silver just started trading under the $30 level, and gold under the $1,600 level. I do feel we're very close to a bottoming process here at this time, but I thought I would do this lecture that I gave in January and put on the web for goldseek.com recently for the general public. So moving on, first thing to look at is the CPI adjusted silver price. If we go back to that and use the government's numbers, which I believe are totally bogus, but if we do that, you can see that silver would have to get back up to about 135 or so to be equivalent to what silver was at $50 in 1980. So that suggests with today's $30 price that we certainly have a long ways to go. And again, that's just the CPI adjusted price, which again, I don't think is very accurate the last several years. If we look at the SGS CPI adjusted silver price, which is from John Williams, and by the way, this chart comes from Gold Charts at the bottom. You can see World Gold Charts, www.chartsareus.com. Regardless, what you see is that we're looking more at like $470 silver, which I think gives you more accurate. Now it also shows that spike as being absolutely huge, and that's part of what this whole lecture is about, is how quickly the silver market moved during the last bull market and my expectations and others for the current market. This is one that's very interesting to going back not to SGS but to the CPI adjusted silver price, which was probably accurate through about 1980, and then things started changing the way they calculated the CPI. Regardless, we were in basically a downtrend from, as this chart shows, like the 1700s all the way until, you could argue, in the 1850 range, it broke out of that down channel for a while, but primarily it didn't really break out until the bull market, the last bull market, and of course the current bull market, where you see both these have broken out of the channel significantly to the upside. What's interesting here, I think, is that this is about the same time that we went off silver coinage. It happened in '65, as most know. This shows that around 1970 is when we started to catch fire to the silver market, and the rest is history. Went back into the channel for the 20-year bear market in metals, and of course it came out, in my view, about 2003. This is comparing the market in silver from 1965 to 1980. You could start the metric wherever you like. I chose starting 1965 because, again, that's when the 90% silver coinage was taken out of circulation in the United States. And we all know the peak, $50 in January 1980. So I compared that to now, setting to zero, to give you an idea of this number here is just a number. It just gives the relative value of where we were at that time versus where we are now. So if I am correct, and we are going to go into a very steep up move in both gold and silver sometime in the future, you can see that that ride could be quite spectacular. Do the same thing for gold. Gold may be tracking a little bit closer to what it did in the last bull market. I'm not that concerned whether they track identically or not. My main idea here is that both these markets have a substantial way to go to the upside, assuming that they do as well as they did in the 1980 bull market, which my view is it'll probably do even better because it's a global phenomena, and the dollar isn't a concern with just some people that were understanding inflation through the 70s and early 1980 before Paul Volcker chose to put interest rates at sky-high levels and quell the markets. This time it's going to be a lot of people globally shunning the U.S. dollar. So this is what I expect. Is it going to be exactly this manner and exactly this time frame? Probably not. But again, the idea, I think, is what's important, that we are certainly, in my view, a long ways away from the top in these markets. I always get the idea thrown at me that, well, only gold will survive. We're going to have deflation, or, you know, silver would only do this or that. Look, they correlate about 85% of the time. So since the beginning of the markets, new bull market, and say 2000 for gold, 2003 for silver, you can pick your own time frame. During this bull market, they have correlated as shown here, and that's just a brief time frame, but they correlate very strongly. We've had a few deflationary scares. We've had, you know, all kinds of quantitative easing. We have all kinds of turmoil in the financial markets, and they still track together. So my point is not one, you should own both, but you're doing yourself, in my view, a disservice if you think that gold only is the way to go. Silver has outperformed gold so far, but the ride is a lot tougher ride because it's much more volatile. So bear that in mind. But again, I think a precious metals portfolio requires that you balance it, and that means you have some silver in it depending on your risk tolerance. So I looked at the what if 90% of the move comes the last 10% of the time. Attribute this to Jeff Christian. Jeff is the one that said this very, very early on. I repeated it, and I never actually looked at the exact arithmetic. It's a pretty simple thing to verify. So I decided to do that and make this a lecture for this year, 2013. So we could argue, you know, when the bull market started and, you know, how big the move was, but these would be petty issues. Again, the idea is what's important. And you could say, well, the bull market didn't start in 65, it started here, or whatever. And then would change the number somewhat, but it wouldn't change the fact that most of the move came in a very small amount of time. So I told you why I chose 1965 to 1980. And the move was basically from the official government set price of what silver was, which is about $1.29 an ounce, to the level of $50. So we have the time frame about 15 years, and we have the price move, which was roughly, say, $48. So I want to just, before we do the little arithmetic problem there, is look at 1979. And silver started off 1979 at $6 per ounce, and again peaked, as we know. So if you use the $6, which I am, and the peak at 50, 6 times 8 is 48. So that's a very easy 800% gain in about 1 year. And this is what it looks like. You can see the 1979 chart here. We're roughly at $6 way back in January, and you know, March we're up to 8, 9, and we were moving up, but not really strongly. Even into July, we're still in the 9, 10 range. And it wasn't until September that we started to really break out, and things really started to go crazy in the silver market. Broke out and made a pretty strong move up to around the 17 level, and it hung there for a couple months, and then like gold, it really took off late November into January 1980. I think this is very significant as far as the last bull market, and hope we can learn something from it for the next one. Again, I don't expect the next bull market, or the one that we're in, to do an exact repeat of this, but these manic mania buying, feeding frenzies can really get going, and especially in a small market like silver. So what this shows, obviously you can read, we went from a $16 to $50 in 37 trading days. That is a big move. Now, if you're leveraged on the correct side, you're long when this happens. I mean, this is a gift that you will get very rarely in the futures market, in any commodity. And it does happen. It's not just in the silver market. It can be in any market, but it's rare. And if it takes off in this kind of a manner and you are leveraged, definitely you want to heed the fact you don't want to get too greedy, and you do definitely want to take some profits off the table. So the move was about $48, $42 of those dollars came in the last 13 months of 180 months. If you take that little math problem, that's 87.5%. 13 months is 7%, so that says about 87% of the move came in the last 7% of the time. In the common vernacular, did 90% of the move come in the last 10% of the time? I'd say, yeah, it qualifies for that statement. And again, those are my numbers. You can jockey around slightly, but it wouldn't affect it much. The idea is a huge amount of move came in a very small amount of the time. And I'm saying this because of the way markets move in general. You can look at the stock market, the housing bubble, the tech wreck. You can look at the Japanese stock market. You can name almost any market, and you will find that you get these big, massive moves when the public comes in late and decides the only thing that they have to own is real estate or Japanese stocks or technology stocks. And they will buy at any price. They will not think. They will just move. They will react. And this time it'll be in the metals markets, which is about the most emotional market on the planet. So I expect, again, huge moves in a short time frame. And I want everyone to be prepared for that. And I also want people to realize that I believe strongly that this market is far from over. So if you look again at the last bull market, you can see, kind of flat, trending upwards slightly for all these years. But if you got in at, the monetary price in 1965 or so and held all the way to the beginning of 79 and held for, 13, 14, 15 years and sold, it went from, $1.29 or $2, let's say, to $6. And we didn't have real bad inflation until this last part of the 70s, or at least officially. So in real terms, you've done okay, actually. You've done pretty good by a buy and hold strategy. But thinking, it's at 6, it's really not going anywhere, it's flattened out, that's about how it's going. You could have sold in here just to watch, that 800% gain go, and you weren't participating in this market. And that'll happen again. I know it will. In fact, I know some of the emails I've received over the last few months, people are discouraged and they're out of the market. But let's be straight up about the thing. After we had the market peak, we had a huge fall, and that's what it looked like. This is on the sell rule only. What about gold? Gold, very similar here. You can see that gold went from 400 to 873 in 36 trading days. So it did a double. Not as good as silver percentage-wise. Certainly a parabolic move, certainly extreme, and certainly an opportunity if you were leveraged or not. I mean, if you had physical gold, certainly you could sell some at 5, sell some at 6, you could sell some at 7. If you're lucky enough to get in the 8 range, good for you. Obviously, it didn't stay there for but a few trading sessions. Same with silver. You cannot dispute either market. Did it attain those levels? Yes. But it isn't like you had a week or 2 or 3 or a month to get out at that price. You didn't. You had a matter of a few trading sessions to get out at that price. And in gold, I'm not sure of gold as much as I am silver. In silver, you couldn't really in the physical market get out at the paper price. The physical market, to the best of my knowledge, other than I think Jim Cook, was paying pretty close to spot, and that's a guess. You'd have to check with investment rarities. But I know in the Los Angeles area, they had bid back to 35. So even though the paper price was 50, if you went to a coin dealer, you would only get 35. Now, you might have been able to sell it to the guy behind you in line on the street for 50. Will that happen again? I doubt it, but it could. So just a word to the wise. I just threw this up here because there's so much, I think, work in the technical arena that doesn't really merit much comment. But one is there's symmetry to the charts, and therefore the market's over. Well, this chart is symmetrical, and a symmetrical chart doesn't prove anything other than it's a symmetrical chart. Plus, it's a nominal price. It's not inflation adjusted. This is assuming that $48 in 1980 is the same as $48 in 2011. Come on, give me a break. So if you inflation adjusted it, it would look far different. Gold silver ratio, I threw it through December, January. It's been trending down. It's gone up recently. I'm not going to redo all my slides. The idea being it started at an 80-to-1 ratio. It's now probably 55-60. I didn't look in the last few days. But the point is that silver has outperformed gold. But again, I think all precious metals investors should own both. And again, if you're risk adverse, you should certainly favor gold over silver. Silver is just very volatile, and it can really be upsetting to some people because it can move so much up and down. So that is not valid anymore. I do will pitch my website a little bit here. There is a part on the site. If you come to the site the first time, you can get, I think a pop-up comes on one time. We don't like to be annoyed on the web like anyone else. but I think the first time visitor there, you can get a pop-up that all we want is an email address and a first name or your nickname or your handle, whatever. We don't care. Of course, we need the valid email, and of course, we make you double opt-in. In other words, you got to validate that that is your email, and then you can get on our free list, and we get on an autoresponder. I give out the 10 rules of silver investing, some bonuses, some kind of interesting material if you're interested in the silver market. It's totally for free. These were some specials that we had. This is, again, a little bit about the website, and that's front page of one of the older reports, but they're normally at least 8 pages. Sometimes they're longer than that. In our view, it's one of the better valued reports out there. And that will do it. I'm putting this up on YouTube. Again, I think to wrap up, this phrase, does 90% of the move come in the last 10% of the time? Certainly no one knows the future, and I would not be willing to say it's going to take place this time. What I am willing to say is I know all markets move from undervalued to fair value to overvalued. We're not even fair valued in the silver market right now by historic standards, and we certainly are not overvalued. And people might ask, well, how do you know when you're overvalued in a fiat money system? And the answer is you probably won't. It's possible that you will, but what I'm going to do is value silver for what silver buys. In other words, historically, and I think gold's a better example, so I'll switch to gold, and I'm tired of saying it, but an ounce of gold will buy in Roman times a toga, sandals, and all, rope, whatever, for the waistband. And in other words, a fine suit of clothes, Roman times, 1900s, today, whatever. But if an ounce of gold buys, 27 suits, it might be time to, go into the clothing business. I mean, that would certainly suggest that if historically gold represents this much purchasing power, and it's 10 times that amount or 20 times that amount, I mean, any thinking person would say, my goodness, that gold is overvalued relative to what? To itself. Gold is buying much more than it historically does. And you could equate it to housing purchase or whatever. That's the idea I will be looking for. You could, Mike Maloney is big on looking at it versus the DJI. I think that's another check. An ounce of gold buys the Dow Jones Industrials. You're probably pretty close to a top in the gold market, and silver would probably be right there with it. So that is it for this look. I think it's important to dispel some of the fear and negative sentiment out there. I'm still bullish. It will take time to reconsolidate, find a bottom, and start working itself back up. But I do want to remark that there are so many anomalies that are potentially available out in the financial markets right now that there could be something that happens this year that none of us see coming, that we all expect could happen, and all of a sudden it's there in front of us, and then you have to chase the market. I would rather see you suffer a little pain if you bought higher than this. I'm sure some of you have, and just hold on and remain in with your position, or be early rather than late. Well, again, once these markets start to move, as I showed in this small video, you can see that they're hard to get back in. Most people that sell don't get back in. Some people are disciplined enough to get back in, but not everyone. So this will be a closeout on the video. Thanks for your attention.